One of the great things that's happened in the real estate market over the last couple of years is that values have gone up. When values go up and you're making a gain on your real estate sale, that's a good problem to have. The problem that comes with it, though, is taxation. I'm Chip Collins with Collins Group Realty, and today we're going to talk about taxation as it applies to your primary residence, an investment property, and a second home. On your primary residence, there's a great tax law that helps protect the taxation on your gain if it is your primary residence that you've had for 2 out of the last 5 years prior to the sale. You can actually exclude $250,000 worth of gain if you file as an individual, and if you file jointly with your spouse, it's up to $500,000 worth of protected gain. That's a big benefit to you if you're selling your primary residence in a market that's already appreciated. So you want to talk to your CPA, you want to talk to your accountant about how that applies, but it's probably one of the best tax laws that are here to protect you and the money you've made while you've owned your primary residence. With regard to second homes, generally speaking, if you just decide that you want to sell your second home, it is a bona fide second home, meaning South Carolina is not your primary residence and you're not a resident of South Carolina elsewhere. The thing about South Carolina is that when you have a gain, South Carolina is going to treat that gain from a state perspective is going to occur and get taxed here in the state of South Carolina. So be prepared. If you're selling a second home outright, you're not reinvesting, you've had a nice gain associated with it, your closing attorney is going to ask you, what is the gain that you've achieved in the sale of this property? And you'll figure that out with your CPA and your accountant. But whatever that is, South Carolina locally is going to charge 7% of that stated gain and withhold that at closing until you go ahead and file a tax return in the state of South Carolina for that taxable event. So be mindful of that, because oftentimes folks are thinking, oh, I'll sell my second home. I know I've got a gain. I'll just deal with the taxation when I get to my tax return next year. The state taxation is going to occur right at the time in terms of a withholding at the time of that transaction. So keep that one in mind. If you have an investment property, a lot of folks now are pursuing the 1031 tax deferred exchange, which is a really neat tax law that basically allows you to reinvest the gain into another like-kind investment property. Like-kind doesn't mean villa for villa, house for house. It could be going from a piece of land that was held for investment and now you want to get into a rental villa. Or there's a long list of properties that actually apply in the 1031 tax deferred exchange. The great thing about that is you're deferring taxation. So you're not necessarily getting away with paying taxes, but for right now you get the power of reinvesting the gain money that you have in the sale and having purchase power into your next investment property. So that's a great avenue to look at as well. And the other thing is, just keep in mind that if you've got an investment property you're not going to reinvest, if you've got a second home and you're just selling it outright, be mindful of your short-term gain versus long-term gain rates. Talk to your CPA and accountant on that. Generally speaking, you want to hold the property for at least 1 year so you go over the threshold into a long-term capital gain rate. Now, those capital gain rates depend, they are variable all over the board based on your income bracket and other facets of your tax situation. So you definitely want to be talking to your CPA about that. But just know that that's the first hurdle, that if you can hold it for more than 1 year, you're definitely getting into the long-term capital gains rates. So a lot to learn about, a lot to think about, but exciting times. Like we said, this is a good problem to have. If you're facing taxation on capital gains, it's because you made a great investment.